time to own the chaos. The stock market is crazy and chaotic.
Crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
Okay, now you got me.
Test.
We were so good. And you know what happened? It was my computer did a big ass update, and I wonder if that had something to do with it. Can everybody hear Fat Man Zoom too? Should be able to.
Test. When you guys say yes, you got to say yes to
there
what
we
you're
go.
saying yes to. Like we can hear Fat Man Zoom.
Looks like we can hear everybody. So, yeah, sorry about that, guys. I had to do just a little test. So, hey, listen, it's been a while since we had an audio issue. So, we just had to make sure that we had to get one in there. So, anyways, what's up, everybody? Let's go ahead and just hit everybody with the starting five, Fat Man Zoom.
All right, so starting five, we got Allen, Prince Buttar, Sean Ethier, Malcolm Barker, and Ross Matthews. Bienvenidos.
Fat Man Zoom's in Mexico. Just up and left my ass.
I'm in Tulum, baby. I'm in Tulum. I booked a flight yesterday. I was itching to get out.
It looks pretty awesome where you're at. Why don't you go follow him on Twitter. I'm sure he'll share some stuff there at Fat Man Zoom. I am also at Own the Chaos. We got a pretty good lineup this week. It's going to be fun. Another big earnings week. Obviously not as big as, the Apples and Amazons and all that, but it's still going to be a big week nonetheless. We have Penn National, which you guys know that we absolutely love. That's going to be a big one. A lot of other ones too that are coming up as well, but wanted to kind of get into a couple of topics here, Fat Man Zoom. CNBC, Yahoo Finance, all those guys have been kind of kissing the Warren Buffett ass this weekend with the Berkshire Hathaway meeting, as they do every year this time of year. And it just got me to wondering, there's been a lot of people that kind of have either dismissed him. We saw Dave Portnoy saying, last year about how Warren Buffett's washed up. And I know that you take that with a grain of salt because it's Dave Portnoy. But there's been a lot of people that have been he's just out of touch. And, the whole Berkshire and not Warren Buffett and Charlie Munger, they're just not in it anymore. And it's interesting because I actually looked at the performance of Berkshire. They obviously didn't beat the market last year. Over the last several decades, the 60s, 70s, and 80s were the big years or big decades for Berkshire and Warren Buffett. Really, since then, they've still beaten the market, but it's been minimal. And really, last year, it was a big issue when he first added to the airlines, during the crash, and then sold all of them at the bottom of the market. And then the airline stocks came back. He also sold Apple after Apple had an 80% run last year. So not all of his Apple, but a good chunk of Apple. So, and he even admitted that he made some mistakes last year, but it kind of makes you wonder, right? Cause he always talks about how you are greedy when others are fearful. And it seemed as if he kind of did the opposite of that last year. And it almost kind of seems like he's doing a lot of things that are against his own code. And I kind of wanted to get your perspective on just whether or not you think that Warren Buffett is starting to become irrelevant.
Yeah, that's an interesting question. Obviously the stakes are so much higher for him. And it's not as simple as just comparing it to our accounts, right?
Yeah,
we have nobody to answer to.
Right.
We have our risk tolerance, and comparatively, the amount of money is far smaller. And so, also sort of the rules and regulations surrounding it are a little bit different. You can't be as nimble. So I think context is important. And so that's got to be sort of put in perspective. But probably, yes. I mean, like, I appreciate him admitting he made mistakes and taking accountability for that. I wonder how much of his, I wonder what sort of their setup is behind the scenes and how much say Warren Buffett really has.
Yeah.
And who else is in there, in his ears? Who else is at the table, giving perspective as well? Because that move last year, especially with the airlines, felt really emotional. And it's not usually, even though there's two faces, right? Charlie Munger and Warren Buffett. I got to imagine there's a host of other people that are bringing data, bringing whatever. And so I think that's what you run into organizationally when you have too many people bringing ideas. And I think it's causing a problem.
Yeah, and him and Charlie both have brought in and kind of talked about their successors and who they're going to be and all that good stuff. They kind of had that lined up. And that was kind of like a big talk of the town last year about just kind of like talking about their own mortality. And I think there's definitely something to that. I think there's also just a lack of understanding, I think, to the changing times, so to speak. It's interesting that like Warren Buffett will go and buy some like Chinese EV companies and that sort of thing, but yet doesn't even give Tesla a second thought. And then you actually had Charlie Munger just this weekend talking about using the exact words that crypto and Bitcoin in and of itself is disgusting. And, just the way that things have been moving. And I could definitely make arguments. I could definitely agree with certain parts of the crypto market that are kind of like make no sense. And we've talked about that. And as Doge actually went crazy this weekend again, as pullback, but when there's use cases and that sort of thing, especially when it comes to cryptocurrency, I think it's probably more or less a lack of understanding, or maybe it's a refusal to understand cryptocurrency, Bitcoin, and that sort of thing.
Yeah, I liken it to sports, and you think about coaches. Like a good example is Bobby Knight. Bobby Knight was one of the greatest college coaches there was at college basketball.
Right.
And he had a very unique way of doing things. He was, very authoritarian, very militaristic type, and aggressive. And like, he was the coach at Indiana. He was a coach like that everybody aspired to of NCAA. And you fast forward to then the 90s and the early 2000s come, and his style of coaching no longer worked. You couldn't be that aggressive. You couldn't throw things. You couldn't, he even like attack the player. Whereas like if it was the 70s or 80s, he could have attacked the player and nobody would have cared.
Right.
And he didn't evolve. Some coaches evolve, some coaches don't, and they fall behind and they're left behind. And I think that's what's happening with Warren Buffett is he's at a point where things evolve. The traditional metrics for how we look at stocks are different. Like it's not about PE ratios. It's not about any of that, partly because of technology and things move so fast now, but also partly just because there's a different group of traders, and really the companies are very different as well. So growth is just much more like rapid.
Right.
And so it doesn't feel like he's evolved with the times, which is not surprising, but you've got to evolve with the times. It's a new way to trade. And I don't want to say it's like totally different, but clearly, you hear people who are like, fundamentally, this thing is hot. And like, you're not looking at that anymore. Like it's just, we're looking at different metrics. And it feels like maybe either doesn't want to go with the times, or maybe he's just a little bit cocky about like, doesn't want to change his ways.
Yeah. Yeah. I mean, look, the guy's got $145 billion just sitting in cash. And I actually, Michael Batnick, if you guys don't know who he is, CNBC correspondent, and he was put on something on Twitter about how he doesn't own any Bitcoin, and it's like he's got $145 billion and he's putting it to work in other ways, and it's like if I was, if I was born in the 20s and I tried to wrap my head around Bitcoin, I would not give a shit. Like I have this huge giant pile of cash sitting aside. Like I'm just going to go invest in what I know. And I think that's what it comes down to. It's like they can give their opinions on crypto and that sort of thing. And that's fine. But at the end of the day, he's doing exactly what we tell everybody to do. And that's just invest in the things that you know. And, if you don't understand something, you're not going to invest in it. And that's definitely something that Warren's not going to do. If he doesn't get it, then he's not putting his money there. And I think that's really what it all boils down to at the end of the day.
Yeah. And you look at that goes for new stuff, newer companies, but that also goes for legacy companies. He's heavily invested in American Express, heavily. We consider it the third best. Yeah. It's Visa, MasterCard, and American Express. And I don't even think American Express is anywhere in the same stratosphere as Visa. And so you also wonder how his due diligence is going as far as the existing companies, because if you look at American Express compared to Visa, to me, it's crystal clear. Yeah. Visa is the answer. Absolutely. And so he's got companies like that I feel like it's almost like he's not also like reevaluating. I mean, I'm sure he obviously is, but why? I don't understand that.
I think if you have certain allegiances, you just stay loyal. And Warren has done that in the past. And I think that's why he's stuck with the airline so long until finally just cutting the cord. Because even before the pandemic and them going crazy, like the airliners were still a struggling industry. They're always in debt. They're always having issues and that sort of thing. And then obviously there's just been so many other ones where I think there's a certain sense of loyalty that you have towards them as well. And I mean, like I said, when you have that kind of money, it's like, as long as you're still making money every year and you're beating the S&P consistently, then it's like you're not all that motivated. Something has to seriously motivate you to kind of jump ship, so to speak.
Yeah, for sure. And again, when you have massive amounts of money, it's not easy to move around like our accounts. It's like, I'll just switch out like that.
Right.
It's an interesting perspective. If I was a betting man and you said Chamath, Aunt Kathy, or Warren Buffett would be at the bottom of my list.
Yeah, I mean it's tough to say that, but I agree. I mean, especially because with Kathy Wood and Chamath being so open-minded and willing to learn on things that they don't understand, that's what attracts me to both of them over Warren at this point.
And they're just so much more willing to take risk, and you got to take risk to get rewarded on that.
Which I think if you look at the way that Berkshire performed in the 60s, 70s, and 80s, that's essentially what's happening now with the Chamaths and Kathy Woods of the world. They're having that kind of explosive growth. I mean, you look back into the 60s, right? Berkshire Hathaway, 28.3%. S&P was 5%. The 70s, it was 22%. Berkshire Hathaway, 5.9%. And then the 80s, he was 40% gains to 17% in the 80s. So, he crushed it for 30 years and then just slowed it down. So I think we're probably seeing just a re-evolution of that or reincarnation of that with, the Kathy Woods and Chamaths of the world today.
Andre says, Warren Buffett is someone I look up to no matter his opinion on crypto. His mindset is my goal. Patience, top level. I would agree. I mean, I think for people just getting into the market, Warren Buffett's a great place to start. When you want to increase your risk and want to take some more chances, I think you then go to other people like Aunt Kathy and Chamath. I think people just want to skip the basic fundamentals that Warren provides. But I would 100% agree. He talks about mindset. He talks about, really simplifying it. And I think it's great for new investors, and it's not sexy, but I think it's foundational. Warren Buffett is foundational as far as trading is concerned, investing really.
Absolutely. 100% agree. All right. Moving on. So Penn National has earnings this week. Thursday after hours, we will be live for that. So make sure you guys are tuning in. Hit that notification bell. We got 159 of you guys hanging in there. So make sure you're hitting that thumbs up. But the earnings
is it after hours or is it pre-market?
Oh, I'm sorry. It's pre-market. Pre-market on Thursday, so we won't be live for it. But we'll be live on Thursday just to give you our reaction of the earnings and the reaction from investors. Their earnings per share are 29 cents. And I think it's safe to say that we both think they probably beat that number. Or am I wrong in assuming that you think that they beat that number?
No, I do.
Okay. So I think that they beat that number pretty handily. We've seen some really positive outlooks from all of the other gaming industry stocks that have reported already. MGM reported and did quite well. Las Vegas Sands did quite well. And then, there's one more that I'm missing. Wynn Resorts reported and they did well. So I think these are all going to continue to do well. The thing with Penn is that it did get ahead of itself a little bit in March and has pulled back 35 to 40% and it's just kind of been sitting in this channel at the $88 to $90 range. And I think that this could be the catalyst that gets it moving again, because I do think that the sell-off from the top, while I think that it was overreactionary in March, I think the sell-off from the top is also overreactionary. I think that there's definitely room for this to go up from here.
Yeah, for sure. So my prediction is I think they beat 58 cents a share is what I have them coming in at.
Oh, wow.
Now,
I had them at 43 for me.
They missed the last quarter, which makes this a little bit more interesting. And the one thing that makes Penn tricky is they didn't perform as well for March Madness in Michigan.
Yeah.
And that was really surprising and disappointing. They came in fourth, I believe, if I remember correctly. So they came in fourth behind FanDuel was 1, BetMGM was 2, surprising. DraftKings was 3, and then there lies Penn 4. And not only that, but it was decreasing market share from the previous 3 months. So it was really, really a poor performance. They've got to come with something. Now, Jay Stone, the CEO, does a great job in conference calls. I expect him to provide optimism. I expect him to provide a game plan. Let's not forget they haven't really been spending money in marketing, so that could be a possibility.
Yep.
But again, don't count out Penn and don't count out Dave Portnoy and Barstool.
Yeah, and Steve King brings up an interesting point. He said, isn't MGM doing better with online betting? And so as far as taking up market share, the only real market share numbers we got, and correct me if I'm wrong, Fat Man Zoom, but I think it was just from Michigan, and they actually did end up doing better as far as taking up market share in Michigan. The flip side to this is also the fundamental side, in that MGM and DraftKings have spent a shit ton of money in marketing. And so the net, return on investment on that hasn't yet to have been profitable, whereas Penn National actually was. They turned a positive net revenue, and the other two were negative. So, obviously, spending the extra money helped them out in market share, but I think Penn National at this point is more focused on getting the books right and making sure that they're right side up, while also continuing to leverage the Barstool community. And they haven't needed to spend all that kind of money to really still get the ball rolling.
Yeah. Their performance can't be understated in Michigan. And I wonder, Brad.
It's definitely a red flag.
When you look at Philly, and when they launched in Philly and the focus and the attention, they were in Philly like nonstop producing content.
Yeah.
Dave Portnoy wasn't in Michigan. They started in Michigan, but it wasn't the same as what they did in Philly. He would spend a lot of time in Florida and Miami.
Yep.
And so I don't know if it's because they just thought, because of the connections to Michigan and the ties, that it would just Barstool would perform better.
Yeah.
But if you look at Philly, they were all in on Philly and they threw everything at the wall in Philly. It didn't feel like they gave the same attention and love to Michigan, and it came back and bit them.
Yeah, I agree with that. I think that it does seem like they went like crazy in Pennsylvania and then kind of fell back because of Dave Portnoy's ties to Michigan, and maybe it was an oversight on their part for sure. I think numbers wise, with them bringing in money and kind of being in the black, whereas like and even FanDuel, they're all kind of in the red at this point because they're spending all kinds of money. So which approach is going to work better? The grow at all costs, or the way that Penn's doing it and kind of just growing while also turning a profit. And I think it'll be interesting to see how it plays out, because obviously taking up market share is a huge part of this, and I would be curious to see how they address that in the upcoming earnings report.
Yeah, and this could end up being a blessing in disguise as far as Michigan's concerned, because we have so many states opening up this year.
Yep.
That this might have been a little bit of a reality check for them. And so you may look back on this and say, wow, we're glad this happened. So we'll see how that plays out. The other thing, as far as Penn's concerned, I think that, or sorry, not Penn. The other thing, as far as Michigan's concerned, is, people are talking about MGM. Kudos to MGM. And that has been another one we've been talking about. I mean, Penn and MGM have been our two favorites.
Yep.
And as much as Penn is disappointed, MGM has surprised. And man, they look like they got a real shot. I've said this multiple times on my channel.
Yep.
Listen, MGM doesn't have to be the top dog, but if they can be top 3 in every state, they're going to be set, because they have so much more exposure that DraftKings and FanDuel doesn't have. And so from a revenue perspective, P&L balance sheet perspective, MGM is in the best spot, arguably, of anybody.
The official sports betting platform of the NFL, they locked that in. So, they definitely have some things going for them. And that gives them the edge and the advantage for sure. And that's why it was our number 2. That's why we like both of them. And I think it's going to continue to be a battle between both of them as well. The other thing with MGM too is that Macau is supposedly doing extremely well over there. And I'd be curious to see how things happen from just like the physical locations in Vegas as well. And let's not forget, Penn also has regional casinos too. That was hit pretty hard by the pandemic, and so they're going to be opening back up. They've already acquired quite a few other casinos. We just talked about them acquiring one in Maryland here. So they definitely have a well diversified portfolio. Obviously, the big focus is on sports betting, but I don't think it goes understated, I guess, or overstated about the brick and mortar side of the business as well.
Yeah, for sure. And guys, I know that earnings are Thursday morning. We're not going to be live publicly, but we do have the Chaos Crew. You can click join next to subscribe, where we will actually be live in a Zoom call with all of our Chaos Crew, all of our levels. We're going to be watching the reaction pre-market, 9 a.m. So if you guys are interested to join the crew, it's $4.99. You get Discord, you get our watch list, you get access to Brad's portfolio. Click that join button next to subscribe.
All right, so we're at the time of the show where we go over our top 5 stocks for the week. And, we talked about Penn, obviously, I think, and I was telling Fat Man soon before we went on air, I feel like we were just going to treat Penn as if it was just like its own thing, like we did Tesla last week. And so these are going to be our top 5 stocks that we also think are going to do well this week. And my first one, Fat Man Zoom, is going to be XPO. Do you have any idea who XPO is or what they do?
I do not.
So XPO Logistics, they used to be, I won't say they used to be, but they actually acquired Conway. Do you remember Conway, the freight, Conway Freight, the trucks and stuff, the big Conway trucks? That's essentially them. So I actually used to work with them when I worked for T. Rowe Price, and it's a great company. They have a good dividend, and I think they used to have a dividend. It looks like they got rid of it. But this, in my opinion, is going to be a huge opportunity. We talk about supply chains and that sort of thing. I think that XPO, they have earnings on tomorrow after hours. Estimated earnings per share is at 97 cents. I think they come in at $1.20, and honestly, I think that's conservative. When you look at the shipping and the trucking business, it is just on absolute fire. I know that we say that about a lot of things in the economy, but when we look at the personal income that came in March, it was up 21%. And that's a number that we haven't seen in over 70 years. So that was mind-blowing to me. People are going to continue shopping on Amazon. We saw how those earnings were, the e-commerce platforms, the housing market, all that is only moves and only does well if the trucking and shipping businesses do well. We saw how UPS did too. So XPO Logistics is very much in that same category. I think that this is going to be something that people are kind of sleeping on. They don't really know that, maybe they haven't paid attention to this much. We look at the chart at this point, and it's gone up some, but I don't think it's gone up enough when you look at and you compare to some of the other shipping companies and freight and that sort of thing. So I think that there's definitely a good opportunity here to grab some XPO, especially if you just look at the industry as a whole. But I think that you look at their earnings history, which they did pretty well on too. I think XPO is going to be a good one. Should you buy it or not before earnings? I think that it's worth probably taking a gamble on before earnings, but also, obviously consider the risk here. But I think that they could potentially pop off on a really positive earnings report.
Yeah, for my second stock, I have Peloton. So Peloton, you guys should already be aware, they had some issues as far as their treadmill was concerned, and some incidences with that. There was also news about a child that had died, which had been announced previously, but that just came out in the mainstream, kind of like just caught fire. And so subsequently the stock dropped. Peloton's coming in at a loss of 12 cents a share, which is a bit surprising. I got to imagine they beat. I've got them at a loss of 6 cents. I really wanted to bring them in positive, but I don't understand why they came in at a loss of 12. Obviously, last quarter was inclusive of the holidays, still lockdown. Maybe they were a little bit concerned about reopening, but I think they beat this handily. Last quarter, the CEO mentioned that contingent upon the successful completion of their Precor deal, which was the commercial fitness products, they were going to tell us this quarter about sort of their game plan as it pertains to Precor. So I'm excited to hear about that. I think that's going to be a huge catalyst if he does talk about the game plan and their expectations as it pertains to like revenue and sort of when they're going to get it rolling, which should be before the end of the calendar year. All that stuff, if we can get details on that, I think that's the biggest thing that'll get this thing moving. International growth plan is going to be helpful as well. And lastly, I'm looking for their connected members to hit 2 million, which would be a huge benchmark. It's not going to be easy, but we've talked time and time again about their brand loyalty, their cult-like following, their low churn rate. And if they can get to 2 million, that's going to be huge for them. This is also beaten down. I think this has presented a great opportunity, and I think this is going to be a great earnings call. It
is beaten down. Would it surprise you to hear that Peloton is in the top 5 as most expensive stocks on the NASDAQ right now as far as a forward PE is concerned?
I don't know if it would surprise me or not. I mean, it had a massive move, so I guess not. I mean, if you told me to guess 5, I wouldn't have guessed Peloton.
Yeah, for sure. I'm not trying to say that like I disagree, because I do think that it's we just talked about this with Penn about how it got way ahead of itself and then it cooled off. But I think the cool off was also an overreaction, and then you add in some of the other crazy stuff that's happened recently, and I think it's more of an overreaction. It'll be great. It'll be interesting to see how earnings play out, because I think that people are expecting a reaction to where we saw like with Netflix, where Netflix, came out with earnings. We kind of expected there to be a slowdown. Like they're not just going to be able to sustain that kind of growth. But I think it may be different for Peloton. The churn rate is really what gets me with Peloton, is that nobody, once you sign up for their programs, then you're there. Like the churn rate was ridiculous. People don't leave Peloton. So that definitely makes me feel good about it. From the chart perspective, it looks good at 98. I mean, if it falls below, I would say $95 a share, it could spell trouble for it from a technical standpoint, but it's trading well below the 200 and the 50-day moving averages. So, risk reward, I think it's probably good here. And then just keep a tight stop if you're not comfortable holding on to something like this and enduring the volatility. But I think it's definitely worth taking a look at from that perspective. For me,
let me just say something real quick.
Oh yeah, go ahead.
First is, I will say there could be some, the argument could be made on the bearish side that the market knows about Precor. The market knows about the tread, the rowing machine even. And so it's a very, very compelling argument that could be made for bearish. So I do want to say that, and I'm very well aware that I could be a little bit of confirmation bias. I see some people talking in the chats. Guys, don't be lazy. Just to say that you're bearish short term is a lazy comment. To say you're bullish long term is a lazy comment.
Yeah.
I know you're just shooting off stuff, but if you want to be taken seriously, give your due diligence, give your analysis on why, not just I'm bearish, because you should be able to make both cases.
Yeah.
It just, if you got a bull or a bear by your name, represent. Don't be like the random person that comes in and just says, I don't like that stock. Give a compelling argument and give your thesis on it.
For sure. All right, so my next one, and this has been one that hasn't really been talked about a lot on this channel. We've talked about it a lot within the Chaos Crew, which if you're not a part of, make sure you're hitting that join button next to subscribe. For $4.99 a month, you get all kinds of good stuff, and you get to be in the community. But we've been talking about Under Armour for a long-ass time. And the one thing that I will say, and I kind of talked about this last week, is that I felt as if, while the spotlight was on big tech last week, I think that we could see a nice rotation back into the cyclicals, the discretionaries, the reopening plays. All of that kind of goes back into focus this week. Not to say that, I would be bearish on big tech or tech in general. And we always talk about how, it doesn't make sense to just leave tech, but it also, might be in your best interest to grab some of these discretionaries. And that's kind of where Under Armour falls in here. I just talked to you about how personal income went up, but the savings rate has also gone up. People have money to spend. And Under Armour has earnings on Tuesday. Pre-market, their estimated earnings per share are 4 cents. I think they come in at 12. The chart screams breakout here, and they just barely touched 52-week highs on Friday, which was super exciting to see. I think that this is very much on the verge of a breakout. If we can break out above those all-time highs, especially with the catalyst of good earnings on Tuesday, I think that Under Armour could really be set to go off. My other thing is, too, when we look at some of the other apparel, your Nikes, your Lululemons, all those that have come out with earnings and kind of given their forecasts, like they're here for like a huge move up and expecting a lot of consumers to continue spending. So I think this is going to be huge for them. I like Under Armour a lot. And I think they're going to do well during earnings.
Yeah, I'm excited for it. Their CEO is making sweeping changes in the organization.
Yeah, they've really turned some things around for sure.
Yeah, and so I'm interested to see the long-term implications for it. The short-term is good.
Yeah.
I do worry long-term about their talent that they're losing. But as far as you want to make decisive changes and help the balance sheet, like he's done it. And so I'm not saying I'm bearish long-term. I'm just saying you might want to keep an eye on it.
Yep.
But yeah, we've talked about it. Like I like how they're going away from trying to directly compete with Nike and sort of carve out their own niche. I definitely think this is going to be a great year for them.
Yeah.
Next up, the one I'm most excited about. Number 4 is our dear old friend Drive Shack. Drive Shack has earnings Friday, pre-market. Their earnings per share are a loss of 14 cents. This one was another one that was tough. I actually have them coming in positive 6 cents. And I'm going to be honest, I'm either going to get this on the nose or I'm going to be so off it's ridiculous. It's not going to be close.
Yeah.
I only say that because if you look at their last earnings, they had a great earnings last quarter. They had a projection of a loss of 19 cents, which was a greater loss, and they came in at plus 13. So they exceeded it by 168%. If you remember, though, Brad, they sold some courses. It was like the only option to do was do activities outside.
Yeah.
I worry that they're going to be hard pressed to come up with anything new this earnings. I can't say that I'm as optimistic this quarter as I was last quarter. However, from a long-term perspective, I'm as bullish as ever. Especially if we get some more details about putteries. We have 3 putteries opening by the end of the summer. We got DC, which we got to go to. We got to find a way to get into puttery before it even opens.
I'm down for that.
We got Dallas, Texas, and we got Charlotte, North Carolina. Those 3 by the end of the summer. 7 more by the end of the year. If this dips, great opportunity. I think that we got to wait for revenue to be driven into putteries. And if they perform like they think they're going to perform, this stock should be on its way to $5 and maybe even $10.
We've already seen price targets of 5+ from a lot of analysts on this thing. I think that is more than achievable. And, you bring up some really compelling arguments as far as reasons to be, cautious. I think that they knock it out of the park, to be honest with you. With the reopening and people getting out, like what we've talked about, this summer is going to be nuts. People are just going to – they're either going to find something to do, and if there's too many people doing whatever it is that they want to do, they're just going to find something else. I think that potentially Drive Shack could be in that category of just Topgolf is completely loaded. Well, Drive Shack's over here, and maybe Drive Shack's going to be loaded too. But I just think that this is going to be something that people really flock to when things kind of really start to get fired up over the summer. This is going to be a good one. I think a lot. I just really like this one. I'd agree, Fat Man Zoom. I can't wait till those earnings come out. My next one is going to be Viacom, and this one, I guess it's a running theme, and I wasn't even really thinking about it this way, but something that got way ahead of itself and then fell flat on its face yet again is Viacom. They have earnings on Thursday pre-market as well. Their estimated earnings per share is $1.21. I think they're going to come in around $1.38. I think, though, that no matter what they come in at, I don't think they could do much worse than what's been happening with them. We saw this all happen. A lot of this happened with the Archegos issue and over leveraging, and Credit Suisse got nailed. And so there's just been a lot of issues with this. Goldman sold a shit ton of it. Viacom, I think, is the risk reward here is actually quite good. It's been following along right on the 200-day moving average. And they've been doing a lot of things as far as, creating more market share from a streaming perspective. They've done really well. I think personally, when you look at just how well they've done as a business, and you kind of take away the Archegos and all that drama, they're actually doing really well. And I think, in my opinion, this is actually quite undervalued where it sits. And this could go up higher, and potentially the earnings could send this one. I mean, there's already a lot of eyeballs on this, so I'd imagine that any positive catalyst that comes out of Viacom should send this.
What do you think a realistic short-term upside is? $65?
Yeah, I mean, with it sitting at $40, I mean, we're down 60% from its highs. And so I think that there's a case that could be made that it might make it a trip back up to its 50-day moving average, which is around $60. So I think that 60, 65 range seems reasonable, and I think that's probably where the fair price comes in at.
Yeah, so just some quick math. If you get it below $40, asymmetrical trade, say like $37 or $36, you really have 8% downside.
Yeah.
Well, if it gets to that 65 mark, you got over 60% upside on your trade.
Right.
So, I mean, that's a great asymmetrical opportunity. Could it fall lower? Absolutely. But man, to me, I agree with you. That risk reward is huge.
Yeah, it's really good. It's really good.
How many people we got in the house?
We got 200 people hanging out with us, and thanks so much for allowing us to be part of your Sunday evening, afternoon, depending on where you're at, or morning, I guess. If you guys could hit that thumbs up, we certainly would appreciate it. And it is time for the Triple C stock of the week, Fat Man Zoom. And it is actually a crypto. It's Dogecoin again.
Hold on one second. Hold on.
What did I miss?
It is time. First, guys, I just want to tell you guys, if you guys like those top 5 stocks, check out our watch list. We give a free watch list out. So if you go to onlychaos.com, we give a free watch list out every day before the market opens, 5 stocks, just like the one we talk about with a breakdown. So go to onlychaos.com and click get a watch list. Sorry, Brad, go ahead. Give us your triple C condom stock thingy of the week.
That was my fault. So looking at Dogecoin, this is going to be the one. So the Triple C stock of the week is essentially just not necessarily shitting on anything. Sometimes it is. Most cases it is. But it essentially is basically Dogecoin is going to be about as reliable as a cheesecloth condom, hence the Triple C. And this thing continues to dilute an obscene amount of coins every single day. It's going to keep going up here and there, but it's going to take a lot of buying to keep this sustainable. I just don't know where this stops. Eventually, the dilution will catch up with the buyers, and the buyers are going to run out of money. And that's kind of what I'm worried about.
Yeah.
So this went all the way up to 40 cents, and everybody's kind of like back into the rah-rah stage, I guess. The hype is back on Doge, but it's still not close to where it was in its highs at, I think it hit 45, didn't it? Oh, no, it did hit 40. So pretty close to where it was from its previous highs. I just can't get behind it, man. I think that if you guys want to play it, fine, but just go into with the understanding that you could lose 100% of your money here.
Chris West said Elon will eventually push Doge to $1, but look out on the way down. I wonder at some point if Elon scales back on talking about Doge, especially because Tesla's exposure to Bitcoin.
Yeah.
I don't know why. Like, I feel like their board's going to get a rap on him. Be like, yo, you got to stop.
You gotta not be so crazy.
Yeah, and just because you hold Bitcoin,
right?
And so, not saying you need to promote it, but you shouldn't be promoting funds that are going in another crypto. So, I don't see Elon continuing this. I think he's trolling. I don't see this continuing to go. He has no incentive to continue to do it other than to annoy people, and that's just not a good enough reason.
No,
they're going to rein him in. That's my opinion. I don't think the people that are in Doge understand dilution.
They don't.
Or realize that that's going on.
Yeah.
And so they are going to be in a world of hurt. There can only be so many dips that you push it back up.
Yeah.
And that makes it worse because when it is time to truly move down, the sky is going to fall. It's going to be bad.
It's so funny to me that like the Bitcoin folks the argument for Bitcoin and its finite amount of coins that are out there, that makes sense, right? From a scarcity standpoint.
Yeah.
But it's these same people that will shit on the dollar for it constantly losing value because they just keep printing money. Whereas Doge is doing exactly that and people just love it. So I just don't. Yeah. That part doesn't make sense, and they're doing it at 10,000 coins an hour. So at some point, essentially, as you're buying this up, 10,000 more are being sold into this thing, and so that's the part that like is super scary. And like I said, eventually, it's no longer going to be scarce, and it's gonna be ugly, I think.
Yeah, could you imagine if Tesla announces that they'll accept Dogecoin to buy Teslas?
That's happening. You know Elon's itching to do that, right? Like that's probably going to happen, and that's what'll send Doge to the roof. Briefly.
Yeah. So what do you have as far as your then top stock under $10?
My top stock under $10. This is a repeat, but I think it's worth repeating, and that's Nokia. They came out with earnings last week, and they did really well. It actually got back up to 468. If we take out the Wall Street bets era back in January, this is actually done nice and steady. So this is under $10. It's sitting at $5, but Nokia is starting to really carve out a really nice market share in South America in the 5G space. And so that's kind of what they alluded to and talked about last week. So this isn't going to set anybody's world on fire, but if you want a nice steady mover that isn't going to really let you down and has a really good upside, especially in the 5G space, I think that Nokia is going to be a good one to grab under $5 right now. And I think that this could potentially, break that $5 mark sooner rather than later and sustain that, not do something like it did back when Wall Street bets attacked it.
Yeah, gotcha. Jason, we got your thesis the first time. You don't have to put it in there again.
We love you, Jason.
All right. So there you guys have it. Triple C. Sorry, actually, I forgot to write it down. My bad. So we got Nokia and then Doge. Yeah. I want to make sure I remember that. All right. I got a few questions that I want to bring up to you. Okay. Relatively rapid fire. But we didn't get an opportunity to talk about Rocket. So what do you think about Rocket earnings this week?
Yeah, I saw a couple people that were surprised that we didn't talk about PayPal either. And I feel like we didn't talk about PayPal because it was just like, well, that's the obvious one. Let's try to find one.
Well, that was the next one.
Okay. So we'll still be talking about it. I think Rocket is going to probably be a struggle. And the only reason that I said it'll be struggle this quarter is because it is historically the slowest quarter from a home buyer standpoint and that sort of thing. And we also have the real estate market isn't in a bubble. It's not going to crash, but it's slowed because of the supply. And so that's kind of what's been bothering me about Rocket, essentially. Do I still think it's a buy? Do I still feel bullish about it? Yes. But what's been kind of like bugging me and kind of been stuck in my craw is that while people are buying houses well above asking price, and while, the real estate market is on fire, the problem is that they're just not building them fast enough. And I'm just worried that we see investors look at something like that and say, well, this is going to be a slow growth thing. I don't know if I want to hold on to this and that sort of thing. And obviously we've kind of seen that in the performance of Rocket over the last several months. And so that's kind of what's got me worried about it. I think that they'll be fine. And I would love to be pleasantly surprised this week.
What about PayPal? What are your expectations for PayPal?
They're going to crush it. Literally just going to crush it. And their outlook is going to be ridiculous. It's going to be awesome.
Yeah, PayPal's my guy.
I mean, that's another benefactor of like just the travel boom that we're about to see.
Yeah, for sure. And I'm excited for PayPal. That's going to be a really fun one to see what they come out with.
They're Thursday after
Roku. I'm not sure. I think it's Thursday. Roku's one that you've been a fan of in the past.
Yeah.
What do you think about their earnings?
I'm not digging it. I think Netflix paved the way for earnings on streaming services this quarter, and I'm not exactly as excited about it as I was 6 months ago or 2 quarters ago.
Well, and let's not forget, last quarter they demolished it.
Yeah.
And they had negative earnings per share estimated a loss of 5 cents. They actually came in at plus 49 cents, which was 1,000% beat. Their estimates are lower than last quarter, negative. And so, number one, we've seen this when you have a monster beat of a quarter, 1,000%. It's hard to surprise people the next quarter.
You're not,
especially when you revise guidance lower.
Right.
You revise guidance lower. Sorry, not guidance, but your next quarter was lower. So I am also worried. To me, I'd be really hesitant to get a part of this. Not doesn't change anything long term for me, but certainly short term it does.
Long term it'll be fine, but I think it's going to take a while before it grows back up into that PE, that forward looking PE.
Excuse me. Woo. All right, that's all I got, brother.
All right, guys. So thanks again for hanging out. That is another Stock Watch Sunday in the books. Fat Man Zoom will be with us again from Mexico on Tuesday. So make sure to catch him on Twitter at Fat Man Zoom. I'm sure he'll put up some cool pictures and videos and stuff like that if you want to go see where he's at. But thanks again for hanging out. If you guys wouldn't mind hitting a thumbs up on your way out the door. And if you're visiting for the first time, please consider subscribing as well. We go live on Tuesdays and Thursdays and, of course, Sunday nights as well. And would love to have you guys as a part of the community. So that's going to do it for me, Fat Man Zoom. Enjoy yourself, my man.
Bye.
See you guys. Have a good night.
Hasta luego.